Look closely at these two stocks. Maruti Suzuki is exploding upward. All India has been stuck for months. Same market, same conditions, completely opposite results. Why? Because the sector behind the stock decides almost everything. Most traders ignore this, and that is why their trades fail before they even start. Today, I will show you a powerful free indicator I built on TradingView. It reveals sector rotation in real time, and it shows you exactly where institutions are putting their money. Once you understand this, you will never trade blind again. Charts alone don't tell you the full story. A clean breakout can still fail if the sector is weak. A stock at demand zone can still fall if the sector is being sold. But if the sector is strong, even an average setup can turn into a big move. Trading becomes easier when you stop fighting the market and start flowing with it. This indicator solves that problem instantly. It's called sector relative strength Afnan, and it is the only tool on TradingView that shows complete sector rotation. It compares 26 sectors, it shows rank changes over time, it maps your stock to its approx related sector automatically. It compares the stock to the benchmark index, and it displays a full sentiment engine based on outperforming, mixed, and underperforming sectors. You get the kind of information that normally requires expensive websites or hours of manual work. Add indicator on your chart, go to indicators and search sector relative strength of NAN, click on star and add the indicator twice. Yes, twice. First one shows the full ranking table. Use this when you want to scan the market and identify strong and weak sectors. Second one hides the table but keeps the relative strength lines and sector and industry details on the chart. Use this when you are trading and want a clean workspace. Go to indicator settings and go down and turn on hide table. With one simple toggle, you can see entire dashboard. Case study 1, Maruti Suzuki. When we open Maruti on the chart, the indicator detects the auto sector automatically. Auto is sitting near the top of the ranking list. It is in the outperform zone. Its trend is strong. Rank change is positive. Relative strength is rising. This is why Maruti performs so well. It has strong sector backing. Case study 2, Coal India. Now watch what happens with Coal India. The tool maps it to the energy sector. Energy is deep in the red zone. Trend down, rank falling. Relative strength negative. This is the kind of stock that traps traders for months. Not because the setup is bad, but because the entire sector is under pressure. The indicator protects you from these dead sectors. Why this is unique? To get this type of information manually, you would need to calculate relative strength for every sector, compare each one to the benchmark, measure multiple look back periods, analyze rank movement, detect trend alignment, and build a heat map. It is too much work, and most traders never do it. This indicator does everything automatically, and it shows all 26 sectors updating live. As you change charts, no other TradingView indicator offers this. Settings. If you want broader view, switch the indicator time frame to weekly. This reveals bigger sector cycles. And if you are not from India, no problem, you can easily change your benchmark and sector indices. They're fully customizable. If you prefer not to view the full table, enable hide all except current sector. When this option is checked, the table will display only the sector related to the current chart. You will see three lines on the chart. These are relative strength RS lines, which help identify outperformance. When all RS lines are above zero, it indicates the stock is outperforming. The lines on the left represent stock versus benchmark index. The line on the right shows stock versus potential sector performance. You can adjust the settings as needed, enable or disable RS lines, change their colors, or modify the calculation period. If the table is too small, change font size or change a table location or hide it on the second instance and only use the first instance for scanning. If you want deeper insight, keep heat maps and rank change turned on. Use the setup that fits your style. Conclusion. Most losing trades do not fail because of your entry. They fail because you're trading against the sector. When you trade with sector strength, everything becomes easier. Demand zone work, breakouts work. Use the sector relative strength indicator, follow the two-layer method, and always align your trades with sector flow. Your accuracy will improve instantly. If you found this video helpful, please give it a like and consider subscribing to our channel. Thanks for watching.